Good morning. Well, the Australian share market looks like it'll rise for the second straight day this week, with the futures suggesting a lift of 0.3% at the open. Now, it's all for a very good reason. Italy, Finland and some U.S. states are easing their lockdowns, and this has fueled the oil price back above $21 a barrel. And this has seen the energy sector rise the most on Wall Street, with ExxonMobil shares up 4%. Tech stocks also had a positive session overnight, clawing back some of Friday's losses, but not all. Netflix shares ended 3% higher. Apple and Facebook both gained 1.4%. On the other side of the market, selling in airlines kept overall market gains under wraps after Warren Buffett advised Berkshire Hathaway sold down its stakes in the airline industry. However, gains in tech and energy saw the S&P 500 end 0.4% higher, and the Nasdaq rose the most, 1.2%. Also overnight, the gold price bounded back above to $1,713 an ounce. Now, what to watch today? Several key things. Firstly, clothing business Kathmandu, KMD, they announced a surge in online sales, almost 3 times larger than last year's April numbers. The majority of Kathmandu and Rip Curl physical stores are also expected to reopen by the end of this week. Now, building material company James Hardie, JHX, they announced that they're dropping their net profit guidance for 2020 to sit between $350 to $355 million. Now, that's about $15 million less than previously expected. James Hardie also announced they're suspending all dividends until further notice, and announced a suite of other changes, such as moving the NZ cement manufacturing plant to Australia, or facilities rather, and they're also closing their South Carolina, USA manufacturing plant for good. In total, they'll axe 375 employees across the globe. So for FY21, capital costs will be 30% lower than James Hardie's 3-year average. Now to a trading idea. Westpac was reiterated overnight as a bell potter buy following the bank's half-year results that they announced yesterday. They announced statutory profit that beat Bell Potter's expectations, and Bell Potter says if you read the tea leaves, Westpac should pay a final dividend, but don't hold your breath for the interim. And that means the dividend yield for the year could be 6%. Now, Bell Potter expects Westpac's price to go to $17.30 a share in 12 months. And what else to watch today? Well, the RBA meets with rates, of course, tipped to hold at 0.25%, while traders and investors will be dissecting the underlying messaging in the statement that's out at 2:30. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.